What is it like to pay yourself when you have an S Corp? Hi, my name is Matt Newsom. I'm an attorney with Iowa Business Lawyer, a law firm that focuses on small business and technology risk. When you start your own company, you are probably going to be an LLC or a corporation, or maybe you're a sole proprietor, which means you haven't told the government what kind of business you have yet. You might be a partnership. These are legal entities, and so the government, most parts of the government and the people in the world look at you and they see, here's an LLC, here's a corporation, here's two men in a truck. These are legal entities. However, the IRS sees you in a different light. And so if you choose to be an S Corp, what you're doing is you're not changing your business from an LLC or a corporation. It's still staying the way it is. All you're simply telling is, IRS, I want you to see me in a different way. So what happens when you do that? Well, if you think about it, there's three ways that you can get paid, or that someone can get paid. First of all, they can be an independent contractor, or what we call a 1099 contractor, in which case a business or someone writes them a check, and then they're responsible for taking care of all of their taxes on that. Another common way is to be a W-2 employee, and I would say most people in America that have jobs are probably W-2 employees. And that means that their employer is using payroll software or a payroll service to figure out, okay, here's how much tax you're probably going to have to pay. Then they deduct that from the paycheck, and then they give the remainder to the employee. And this is nice because it means that when it comes time to file your taxes, you're close. Maybe you have to pay a little bit because you estimated low, or a lot of people like to pay a little extra to be safe, and then they get a tax return at the end of the year. And then lastly, there's the self-employed business owner, which works pretty much just like the 1099, because the business will profit and then the owner will just write themselves a check or transfer the money from their bank account related to their profits. So this month we made $6,000. I'm going to keep a little in the business and write myself a check for $5,000, for example. From a tax perspective, though, it's just like the 1099 employee. The business owner is responsible for paying quarterly estimated taxes. And if you don't pay the quarterly estimated taxes, then you're probably going to pay a penalty at the end of the year. And so it can be a little tricky. This is one of the benefits of being a S Corp, because then the owner of the business can treat themselves like a W-2 employee. And so they have to decide what a reasonable salary is. And so I usually tell owners to think about what you would pay someone to step in and do your job for you. And so maybe you might pay somebody $50,000 to do your job. And so pay yourself a salary of $50,000. And then you pay taxes just like you would normally on that $50,000 income. So each month you make about $4,000, and then you deduct taxes. And then any profit the business makes after that, you actually get to be treated a little bit differently tax-wise. And so I would strongly suggest talking to a lawyer or an accountant if you would like help with that, because you do want to get it right. You might still have to pay quarterly estimated taxes. In fact, you probably will have to pay quarterly estimated taxes. But it is actually really nice, because then you get your taxes deducted from your paycheck. And so at the end of the year, you file your taxes just like you would when you were an employee. Plus, you have to deal with the profits of the business. This is definitely an advanced topic. If you want to talk about S Corp, then you should talk to, like I said, a lawyer like me, Matt, with Iowa Business Lawyer. Or if you already have a relationship with an accountant, your accountant is an excellent person to talk to about this. So talk to a pro, do some research, but talk to a professional to get help setting this up. And that way you won't get in trouble with the IRS, and you'll get the maximum benefit of this election, which could save you $5, $6, maybe $10, maybe even $15,000 a year in taxes. All right. See you later.